The current live trading price for Avadel Pharmaceuticals plc under the ticker AVDL is $23.56, marking a substantial gain of $4.32 or 22.45% for today's session on heavy volume that has already exceeded 12 million shares. Now, the common expectation here is that this massive spike is purely a function of the latest unsolicited bid. And while that is absolutely the primary catalyst, the deeper truth is that this price action is not just reacting to a takeover bid, but is actually an immediate market validation of the drug's core worth, a value that many in the market had fundamentally underestimated until now. That is the unexpected angle. What we are seeing today is the market finally catching up to the real commercial and clinical value of LUMRYZ, their flagship narcolepsy treatment, a value that was effectively hidden in plain sight behind a complex acquisition narrative. The general sentiment about AVDL for the past month has been centered around the $20 per share acquisition agreement they struck with Alkermes in October, a deal which included a cash portion and a contingent value right, or CVR, tied to an approval for an additional indication. Investors had mentally capped the value of the stock right near that $20 ceiling, assuming that deal was final, and consequently many were content to trade in a narrow range or even sell out to lock in the arbitrage spread. This expectation has been completely upended by the news yesterday. Avadel has received an unsolicited, non-binding proposal from Lundbeck A to acquire the company for up to $23 per share, which immediately explains today's explosive move. The Lundbeck proposal is structured as a $21 per share cash payment at closing, with the potential for another $2 per share CVR. This new higher offer is what the Avadel board has determined could reasonably result in a company superior proposal, which is a necessary legal term in this situation, and it gives the board the right to engage in discussions with Lundbeck despite the prior agreement with Alkermes. The sharp contrast between the original $20 ceiling and this new $23 figure has driven the stock to its current level, creating a powerful tension between the old, accepted market reality and the new, higher expectation. This isn't just a $2 difference in share price, it's a shift in how the market values the entire asset base. And the significant trading volume underscores the speed and conviction of this repricing. Major institutional players who were moving around the stock even before this news are now scrambling to adjust their positions. Just days ago, we saw disclosures from major financial institutions like Morgan Stanley and Goldman Sachs showing significant trading activity, long and short positions in AVDL shares, a clear indication that big money was already positioning itself around the anticipated finality of the Alkermes deal. The Lundbeck bid has completely thrown that professional playbook out the window. Now those positions have to be immediately reevaluated, which contributes to the frenetic energy we are seeing in the tape. This is a classic merger arbitrage scenario, but with a competitive twist that ratchets up the drama and the potential payout for current shareholders. The immediate daily swing is entirely about this bidding war, but to understand why a company is suddenly the target of two major biopharma players, we have to look past the takeover chatter to the fundamental business. Avadel is a biopharmaceutical company focused on developing and commercializing medications for sleep disorders. And their central asset, the crown jewel, is LUMRYZ, which is an extended-release formulation of sodium oxybate for the treatment of narcolepsy. What makes LUMRYZ special and why it's attracting this premium is its once-nightly dosing regimen. The established treatment options in the market, most notably the drugs from Jazz Pharmaceuticals, require patients to wake up in the middle of the night to take a second dose. For a condition defined by sleep-wake cycle dysfunction, having to set an alarm to take medication halfway through the night is a significant barrier to compliance and a major inconvenience. LUMRYZ, by offering a once-nightly solution, provides a clear, clinical, and practical advantage, a difference substantial enough for the FDA to grant it 7 years of orphan drug exclusivity based on a finding of clinical superiority. That is the underlying reality the bidding war is now highlighting. The market had acknowledged the superiority, but it hadn't fully priced in the value of an asset that can effectively capture a sizable portion of a market with a clear patient-preferred differentiator and a 7-year shield of exclusivity. Financial reports from the third quarter of 2025 showed Avadel's net income swinging to a positive number, a significant turning point in their investment narrative. While the net income of a small company can fluctuate wildly, that move, driven by the commercial launch and growing sales of LUMRYZ, was a clear signal of the drug's commercial traction. Management had previously guided for 2025 net product revenue in the range of $240 to $260 million, representing a significant year-over-year increase, and reported a strong pipeline of new patient starts. These are not small numbers for a company of this size, and the positive cash flow generated by LUMRYZ sales, as projected by management, further de-risked the company and made it a much more palatable acquisition target for a larger firm like Alkermes or Lundbeck. A key part of the investment story, which now becomes crucial in the bidding dynamic, is the potential label expansion for LUMRYZ into idiopathic hypersomnia, another debilitating sleep disorder. This is what the CVRs in both the Alkermes and the Lundbeck proposals are tied to. This potential second indication significantly expands the addressable patient population and therefore the drug's peak sales potential, making the ultimate valuation highly dependent on the perceived likelihood of that approval. The stock's volatility is certainly not for the faint of heart, making this the kind of situation where you might look to more established platforms for managing your overall holdings, especially if you have other high-growth, high-volatility names like Tesla stock or Nvidia stock in your portfolio. For those who prioritize stability and comprehensive financial planning, services from a full-service institution like Fidelity may be more appealing, utilizing things like Fidelity Investments, Fidelity ETFs, or even their Fidelity Wealth Management and Fidelity IRAs for long-term strategic placement. Conversely, if you are a highly engaged, self-investing trader looking to capitalize on this kind of short-term volatility, the zero-commission structure of the Robinhood app or the robust Interactive Brokers trading platform might be what you use for your individual brokerage account. The reality is that whether you use a sophisticated platform or a basic invest online tool, managing risk in a takeover situation like this is critical, and it often involves understanding the probability of the higher bid succeeding versus the lower accepted bid. The current situation sets the stage for a classic bidding competition, and the share price is now effectively acting as a forecast of the final takeout price. The fact that Lundbeck came in with a higher offer suggests they see greater value in LUMRYZ than Alkermes initially offered, or they are simply more willing to pay a strategic premium to gain immediate entry and a strong foothold in the sleep disorder market. Alkermes has its own late-stage sleep medicine asset, Alixorexton, in its pipeline, and acquiring Avadel provides an immediate commercialized product and established sales infrastructure, a potent one-two punch that instantly makes them a leading player in the space. The Avadel commercial team, which has successfully launched LUMRYZ, is a valuable, non-tangible asset included in the deal. Lundbeck, on the other hand, is a global pharmaceutical company with a focus on brain diseases, making Avadel an extremely synergistic fit for their existing portfolio and market expertise. Their $23 offer reflects a willingness to pay more to block a competitor and secure a near-term growth driver with significant long-term potential. This is a battle for market position, not just a simple asset purchase. The legal dimension of the M&A process is also in play, with the Avadel board carefully navigating its fiduciary duty to shareholders. Having deemed the Lundbeck proposal to reasonably be expected to be a superior proposal, they can now engage in discussions, which is the necessary step before they can formally terminate the Alkermes agreement. The Alkermes agreement will have a termination fee, a standard feature in these contracts, and the final decision will come down to whether the Lundbeck offer, after due diligence and negotiation, is definitively superior after accounting for that fee and any matching rights Alkermes may exercise. The current share price of $23.56 actually trades above the Lundbeck offer price of $23, which tells us that the market is already anticipating either a slightly higher final offer from Lundbeck or a matching or counteroffer from Alkermes, or even the possibility of a third bidder entering the fray. This premium over the current bid price is a pure speculative expectation, which is why the stock is moving with such force today. Beyond the immediate M&A drama, we must remember the broader context of Avadel's core product strategy. The company is actively pursuing the clinical development of LUMRYZ for the treatment of idiopathic hypersomnia, as mentioned, and has also in-licensed Valioxybate, a salt-free formulation from XW Pharma. These pipeline efforts, while secondary to the current acquisition discussion, speak to the company's commitment to the sleep medicine space and add incremental value to the acquirer. Any firm that buys Avadel is not just acquiring a single approved drug, but a complete platform for sleep disorder therapeutics. The focus on